Hey everyone, welcome back to Corporate Decoder, where we uncover the real story behind the numbers. And let's just say our subject today already needs a serious financial tune-up, so buckle up. Today we're diving into Graphjet Technology's annual report. This company is trying to make graphene and graphite from palm waste, which sounds pretty green, but their financials are, well, let's just say they're not exactly powering a global energy revolution just yet. We're going to look at their struggle to become a major player and what the numbers tell us about their future. Before we get into the nitty-gritty, if you dig deep dives into company reports like this, make sure you're subscribed. And hey, we've got a great community over on Discord, linked in the description below, where you can connect with fellow corporate decoders. Graphjet Technology is trying to do something unique. They have a technology that turns palm kernel shells, a waste product, into artificial graphite and graphene. This is supposed to be cheaper and better than what's out there now. They've even got patents for it, which is great. The problem is they haven't really made any sales yet, and they've spent a lot of money getting to this point. The company is really upfront about the risks, and there are a lot of them. They talk about cybersecurity threats, managing international operations, which can be tricky, and dealing with all sorts of regulations. Plus, there's the inherent risk of manufacturing, like accidents and environmental issues. It sounds like they're aware of the dangers, but navigating them successfully is another story. They've only been around for a short time, and they're still developing their main business, which is making this special graphite and graphene. It's tough to predict how much money they'll make or how much their expenses will be. They admit it's hard to guess what trends might affect them. This is pretty standard for new companies. But for Graphjet, it feels like the stakes are even higher because their whole business model is so new. This is a big red flag. Their own auditors are saying they have serious doubts about whether the company can keep operating. Why? Because for the year ending September 30, 2024, they lost about $17.8 million. And their short-term debts were way higher than their short-term cash. Since they started, they haven't actually sold anything. All the money they've spent has gone into building their factory and getting their technology ready. This uncertainty about their ability to keep going is a major concern for anyone thinking of investing. Let's look at the numbers to see how bad it is. The balance sheet as of September 30, 2024 shows cash and equivalents of just over $340,000. That sounds okay, but then you see their total liabilities are over $20 million. That's a huge debt load for a company with almost no sales. Their total assets are only a little over $2 million, and a big chunk of that is property and equipment which they haven't even fully paid for yet. This imbalance is really worrying. In fact, their total current liabilities alone are almost $20.5 million. That includes things like loans and payables and a massive provision for bonus of $13.8 million. This bonus provision is for their management team tied to the business combination. While rewarding success is good, a bonus that large when the company isn't making money yet is pretty bold. Now let's talk about how they did financially. For the year ending September 30, 2024, their revenues were zero. Their cost of revenue was also zero. That means their gross profit was zero. But then you look at their expenses and they had almost $17.5 million in general and administrative expenses. This is where that huge bonus provision comes in, along with other costs like staff, marketing, and professional fees. This ended up with a loss from operations of over $17.4 million for the year. Compared to 2023, when their loss was just $1.2 million, that's a massive jump. Most of that jump is due to that $13.8 million bonus provision approved in February 2024. So when we talk about a 13.22% increase in general and administrative expenses, that's mostly driven by this bonus PAMITI 4. So when we talk about a 13.24% increase in general and administrative expenses, that's mostly driven by this bonus 24. So when we talk about a 13.22% increase in general and administrative expenses, that's mostly driven by this bonus PAMITI 2% increase in general and administrative expenses. That's mostly driven by this bonus PAMITI 24. So when we talk about a 13.22% increase in general and administrative expenses, that's mostly driven by this bonus payment. All in all, their net loss for the year soared to a staggering $17.8 million, a huge leap from the $1.8 million loss in 2023. They are burning through cash at an alarming rate without any revenue to show for it. They are still in the testing phase with their factory in Malaysia getting ready. They expect production to start by the end of August 2025. The company is counting on raising more money, which they did manage to do a bit in November 2024, raising about $1.4 million. They also made agreements to settle debts with a director and shareholder in April 2025. But the big question remains, will they be able to get enough funding? And more importantly, will they actually start selling their product and become profitable? Now let's talk about their stock. It trades on the Nasdaq under the symbol GTI. However, the company has been having serious trouble with Nasdaq. They received notices for not filing their financial reports on time, for their minimum bid price dropping below $1 for 32 consecutive days, and for their overall market value of listed securities falling too low. Things got really serious in June 2025 when Nasdaq actually denied their request for continued listing. They are trying to appeal this decision, but it's a tough spot to be in. A delisting would mean fewer ways for people to trade their shares, less attention from analysts, and a much harder time raising money in the future. This is a critical challenge for their survival. They also had to restate their financial statements for the previous year because of some mistakes. They admitted to incorrectly valuing intellectual property they bought from a related party and misclassifying some expenses. This kind of error erodes investor confidence and can lead to legal problems, which they also acknowledge. Overall, Graphjet Technology is tackling a really ambitious project with a lot of inherent risks. They have innovative technology, which is a plus, but their financial situation is precarious. They are burning through cash, have a ton of debt, and are facing serious Nasdaq listing issues. They are also heavily reliant on securing more funding and actually getting their product to market and selling it. The fact that they've had to restate financials and are under scrutiny by Nasdaq paints a picture of a company that is struggling to manage its operations and finances effectively. For investors, the immediate concern is the going concern warning from their auditors and the Nasdaq delisting threat. Even if they manage to secure the funding they need, they still have to prove their business model works in the real world. The world needs better battery materials, and if Graphjet can overcome its massive hurdles, it could be a big player. But right now, the odds are stacked against them. There's a lot of hype around graphene, but Graphjet needs to show they can deliver the goods, not just the promise. It should be a big player, but right now the odds are stacked against them. There's a lot of hype around graphene, but Graphjet needs to show they can deliver the goods, not just the promise. So, what's your take on Graphjet Technology's chances? Do you think they can turn things around, or are these numbers a clear warning sign? Let me know your thoughts in the comments below. If you found this breakdown helpful, smash that like button and subscribe to Corporate Decoder for more no-nonsense analysis. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you in the next Decode.